All right, then. In that case, if there are no more questions, comments, rude remarks, let's get on to tradition. It is tradition here at High Noon Highlights. At the end of the day, I like to go over all of our current positions, current indicators, and the trade plan that we have for the upcoming market movements. Okay, so first things first, as always, let me go over the indicators that are most important, okay? New York high low line coming back down. We haven't seen it go over the 20-day moving average. It hasn't made any type of, it made one slight bullish indication or whatever, bullish price action, whatever you want to call this. But it wasn't a full bullish move, okay? It didn't get over, it didn't curve up all the way. It didn't get over the 20-day moving average on the New York high-low line cumulative. Now it's coming back down. If it goes below the August lows right here, then bear market continues, okay? That rolling bull market that I was talking about happens later then, okay? Or if at all, maybe not even at all, if this goes down to this, okay? So we will reassess. If this comes back down, we will have to reassess our 3 to 6 month outlook on what is going on, okay? I'm adding this to our indicators as well, SPXEW, which is the equal weighted S&P 500. If it loses the 50-day moving average, I think there's going to be increased selling. Selling begets, I think in this market, selling begets more selling. There's a lot of negative delta positioning by the markets and by dealers, meaning that as prices come down, dealers will have to sell more of the underlying as those deltas increase on those negative delta positions. So as weakness comes into the market, it will further fuel more weakness because of that gamma positioning. So keep that in mind. That's where this is coming from. All right. As always, TIP TLT moving up. Okay. We are seeing TIP TLT moving up. Inflation expectations are going up because we are seeing commodity prices go up. DBC is up. Not as much as it was earlier today, but it is now recovering its losses. We are seeing energy, especially crude and natural gas, up as well, and most of the grains are up. Wheat being the strongest of the day, corn still making its higher high right here. All right. So DBC, all those is pushing TIP TLT expectations up. TNX, which is the 10-year treasury rate, is going up. So this is all headwinds for growth stocks. Growth stocks don't do well when interest rates go up, okay, and when liquidity tightens. Okay, so those are the indicators we're looking at. Dollar, another indicator that we're looking at. Dollar is strong today. It started out a little bit lower in early trade, but then it started going up again. So dollar's going up. Euro coming down. This is a risk-on currency. It is coming down. Australian dollar also is teetering between that 6903. Remember that 6903 pivot? It just keeps going up and down through up and down. You know, passing that pivot. I think a lot of traders are waiting for Jackson Hole. A lot of them are waiting for some sort of response, some sort of message from central bankers. So we'll see. We'll see what happens. Okay. So those are the indicators. Oh, ZF, guys. Again, you know, I think as long as ZF, our 5-year bond is going down, the 5-year treasury bond is going down, as long as yields keep further inverting, there's going to be a dash for cash. Cash is going to be a good alternative to risk assets. Okay, that TINA, there is no alternative. That is no more. When the yields invert like that, when dollar is on an uptrend, there is an alternative. It's called keeping cash. So that is, of course, headwinds for equities as well. So let's get to our plan. Nothing has changed really. Day to day, as you have probably noticed, I don't really change my plans day to day. I'm not in front of my screen all the time. You know, I don't, you know, that just my opinion. I don't like being in front of my screen and getting abused by 1-minute candles every day. That's just not me, all right? I like to look for bigger trends, and I like to do stuff during the day. I'm sure a lot of you who work during the day, I think you guys probably share the same sentiment. You guys want to be able to, gain financial freedom by, having good gains in the market, but you don't want to be stuck in front of your computer all day. Looking at those bigger trends works. And so, sometimes you got to be patient for that. Bitcoin USD, we're still waiting on that Bitcoin to gold ratio to get to that red line that we have that started back in 2017, that trend line, upward trend line. Okay, still waiting on that. ETH, same thing, trend line from the 2020 lows. ETH to gold ratio, we're still waiting on that to come down to the red line to buy in as well. All right. And I'm adding UUUU and all those uranium names. I mean, they were always part of the plan, but it was running away so much that I thought, oh man, we're never going to get there. And I thought actually recently, even just last week, I was checking and it was coming down. So I said, maybe this week, next week, I reintroduce UUU back into our plan again because it's getting closer to our buy levels. Boom. This Japan news comes out with the power plants. They're going to try to increase their nuclear capabilities for power because of high energy costs. And it sends all uranium names up. I do still think there's going to be one big drawdown in the market. And when it does, if it gets to around let's say mid fives, I think I'm going to start buying. So UUUU, part of the plan, we're going to start buying mid fives right here, okay? Mid to high fives, all right? So that's part of the plan. I think uranium, more and more governments are going to get friendly towards it. We've been saying that since June. We saw that coming in June. Shame on me for not jumping then. I was too scared to go in. I wanted lower prices, too greedy. Okay, so it is what it is. That's life, that's trading, but part of the plan. HUT, I'm still in those covered calls. I'm still going to keep buying more when it gets to that 165 zone in HUT. Ford, I still want to get a crack at Ford. If we can only get to, that 1380 zone, that would be wonderful. We'll see. We'll see if we can get there, okay? So Ford, still part of the plan. What else is part of the plan here? SPY and all those names, indices, same thing. We're waiting on that MOAB signal, right? We're waiting on that MOAB signal. And what is that MOAB signal? It's going to be New York high-low line. It's got to curve up over that 20-day moving average, and it's got to make a higher low, okay? That plus our junk bonds AD line, if it can make a higher high and make a divergence with prices, that plus the New York high-low line would make a combo MOAB signal. Mother of all, buy the dips, okay? So that's when I really want to buy the dip with size once I get that, once our indicators tell us to do so. But until then, we remain patient. I do think, however, that MOAB signal is probably going to start forming right around that 360 zone if we were to sell off. And so I may start buying some shares at 360, although I will wait for the bigger buy purchases for long-term shares at 345, 342 or so, 342, 345 zone. And when we get that MOAB signal, which I think, at the lowest, it will probably be around that 340 zone, I will be buying 1 year out in the money calls as well. Okay, so that hasn't changed. Although now I'm also looking at the S&P 500, the Russell 2000. The Russell 2000 is a really strong index right now, especially after the rebalance happened in June. If we see a meaningful pullback and we see the MOAB signal, maybe instead of the in-the-money calls on SPY, I may buy it on the Russell 2000, either on the RUT or IWM. IWM is the ETF of the Russell 2000. So one or the other, or I might just buy it directly on the cash index on the RUT. Okay, so I'm adding that to the plan. What else is in the plan? Tesla's in the news. Tesla plan is still there. I short at this red line. People laughed at me saying that, we're never going to get there. We're never going to get there. I said we were going to get there around here. Okay, around here, I said I'm going to short here. People laughed at me. Now people aren't laughing anymore. That's definitely a possibility. I mean, it's already gone up about 40%. What's another 10%? What's another 10%? It could. So if it gets there, I short. What else is part of the plan? Crude oil. Crude oil part of the plan. Again, we are waiting to see I want it to close above this right here, okay? I want to see it close above this level right here. And if it does, if it closes above this high right here, then it made a higher high on closing basis. Then I want to see it pull back, make a higher low, and that's where I go long on crude oil. Okay, I'm gonna go long with call vertical spreads on the actual futures contract itself, or I may use USO, whichever gives me the greater call skew, the call forward skew. Whichever gives me the greater skew, I'm gonna go with that. So I'll let you guys know when that time comes. We won't know until it makes that, if it even makes that lower low. So there's no point in looking at the skew now. I will sell when we get to around 115 to 118 zone. That's where I'm going to take profit on those call vertical spreads. And then when it gets to 120, I'm going to buy put vertical spreads all for the way down. Okay. So I think it's going to be stuck between these two levels probably for the rest of the year. Okay. So I'm going to play both sides. All right. That's my crude plan. And then gold. Gold. I'm still waiting, being patient. I think this is a dead cat bounce. I think we still get to these lows of 1680 or so. I will buy call vertical spreads either on GLD ETF or on the actual gold contract itself. Okay, I will buy it there. All right. So that's my current plan. Let's run through the positions I have. As always, ARK. I still have those lottos. They're underwater. I bought them for 9 cents. They're at 4 or 5 cents. I still got 2 or 3 days left on them. Whatever. We'll see. I put a small order in. I only got a partial fill on a small order. So it really is meaningless. But, I mean, it's fun to watch, I guess. Dow Jones Industrial Average. We still are in the same spreads. A 300, 290 October spreads. Vertical debits. EWT, which is Taiwan, we're still in those December put spreads, the 49.40 put verticals. FEZ, Eurozone STOXX, we're still in the same spreads. November 32.27 put vertical debit spreads. HUT, I'm still in HUT shares. I've covered calls for January, then the $5 calls. What else? IWM. I'm still in IWM as well. November, 180, 170 put vertical spreads. Same strikes on the October chain as well too. Nothing has changed. QQQ, I'm still in my QQQ spreads. For November, I'm still in the 305, 295 put verticals. And of course UVXY, still in those two spreads in December, 1424s and the 1520 call vertical spreads on those. Okay, so that is my that's trading positions, indicators, trading plan. Boom, checkmate trading. Any questions, comments, rude remarks?